This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
And now we're going to look briefly at integrated reporting, a subject which has been brought into many ACCA syllabuses. First, what is it and how does it differ from ordinary reporting? And I suppose ordinary reporting can, and often does, just contain the financial statements, which is all historical. What we want in integrated reporting is to look at the strategy, where the organization is headed in the longer term, how it's governed, how we're going to measure, how we're going to improve its performance. And we need to see this link, we need to understand the link between good future financial performance and what's happening in the environment and what's happening in the economy and what's happening in social, really the pastel type influences on the future of this organization. And this should enable the organization to display how or it hopes to create value over the short, the medium and the longer term. By bringing this information together in the integrated report, it should enable the directors to make better decisions, because all the information they need is kind of there. It should enable the investors to make better investment decisions about what they feel about the future of the company. And it should really encourage a more joined up approach to decision making. The principles that we need to look at in this are these. Now, these are the overarching principles. This is not the contents. This is what the kind of qualities we want to see in here. First of all, very much a strategic focusing on the 5 to 10 year future. Connectivity of information. We must understand how maybe a change in the economy, a change in legislation, a change in world stability, for example, is going to affect the future and maybe be affecting future results. We want stakeholder relationships to be put in there also. We want maybe to say that we depend very much on customer loyalty. We want to do anything which is going to kind of disturb that in some way. We will be making statements about what we're going to do for our employees. Maybe we have decided that we're going to voluntarily pay considerably more than the minimum wage to some people, because what we want to do is to provide people with what's sometimes called a living wage, even for people in basic jobs, because we feel we as an organization should be capable of doing that. We want to make sure we don't clutter it too much with immaterial stuff. We don't want to make it too long. We want to keep it concise. We want to make it as reliable as possible. Ideally, you'd have almost an audit report attached to the integrated report. We don't want to leave out important information. And we want it from one year to another. As you get in financial statements, consistency is very important. You don't want to be changing the way that you're measuring aspects of the economy or how maybe pleased your customers are with your service. Otherwise, you're open to manipulation of what's in the report. And the contents. This is the contents which has been suggested by the international. Beg your pardon. And now the contents. These are the contents which have been suggested by the Integrated Reporting Council. An organizational overview and the external environment at the top, maybe saying how we're divisionalized, in what countries we have outlets, factories and so on, and maybe to assess at that point how the market is going in South America, how maybe it's going in Australia, how maybe it's going in Europe and so on, and maybe what the prospects for these different areas are. Governance. How do we govern the company? We'll be looking at non-executive directors, making sure there's a balance in there, so we can show that we are complying with good corporate governance. The business model, basically how you make your money. Are we making our money by a lot of research and development to develop new products, Are we making our money by not so much research and development, but by concentrating another area of the market, making more basic products? But we need, telling people what in a way makes us tick, how we make profits. Risks and opportunities, it's important to point these out, both to board members and to employees and to shareholders. Where are the risk areas? And also, ideally, we'll be saying how we're defending against those risks so that we can minimize them as far as we can. We also have to look at the opportunities, without giving maybe too much away to competitors, but to give maybe hope to investors and employees. Our strategy and resource allocation, how have we decided how much to spend in research and development? How have we decided how much to spend opening up operations in South America? We need to know something about the decision-making process of the board to know whether or not we are happy with maybe the way the company is being governed and directed for the longer-term future. We will show their performance. That very often will come in the financial statements, part of the integrated report. It will have an outlook, how we think we're going to be doing in the next few years. It's part of the strategic outlook, the focus on the longer term future that's going to be important. And also the basis of preparation. Some of the measurements in the strategic report, in the integrated report, may be relatively difficult. It might be worthwhile saying how you are measuring the percentage of waste which is recycled, or how you're measuring how we're decreasing our use of carbon material, greenhouse gas producing material, and so on. How we're measuring maybe customer satisfaction, how we're measuring maybe our competitive strength, if that's been reported there. So we need to know what the basis of these measurements are before people can really understand them. But it's fully explained in the chapter of the notes. It'll be chapter 26 of the notes. That's worth having, just a quick read through it.